Hello all, welcome to our Daily Horizon View show. We are looking at the top fives for the ASX exchange traded funds. Today our spotlight is VBLD, which is the Vanguard Global Infrastructure Index ETF. If you're keen just to have a look at the ETF, just click through to the end of the video, about 3/4 of the way through the end. As always, we're here to give you guys information because information is power and we want to crack your financial sky. Give us a thumbs up, give us a subscribe, and if you want to do that, it's always best to hit the bell function as well, so then you'll actually get your notification when you see some new videos. Top 5 percentage rises today: GDX, QAG, BBLD, CNew and PM Gold. So today we'll see a lot of movement on gold, a safe haven type of investments, and also a bit of infrastructure movement as well, mainly because of the retaliatory tariffs put on America by the Chinese government. So you will see a little bit of movement in that direction. So GDX is the biggest ETF on the market, I'm pretty sure, and that is a VanEck Vectors Gold Miners ETF. And that one tracks the New York Stock Exchange ARCA Gold Miners Index, and you're looking at about $12 billion of market cap in that one. Quite popular for the gold bugs. So we saw a rise of 4.17%, which is $1.21. Pretty good volume for that ETF of 9,200 shares traded today. So for our top 5 percentage falls, we saw QR, Food, UPB, UBU, and Robo. So for those who may be watching along, they'll know that Cure is the ETF's S&P Biotech, and that one tracks the S&P Biotechnology Select Industry Index. We saw a fall today of 2.8%, which equated to $1.44, but that was on a very, very low volume of 121 shares traded, so really not much to see there in my opinion. Top 5 dollar rises. We saw GDX, what a surprise. VBLD, which is our spotlight. If you want to just look at the spotlight, reminder, just skip on through to the end of the video. Then we had IJP, IZZ, ILB. So as mentioned before, volume of 9,200. We saw a little bit of price movement, but yeah, I think just really driven by the troubles between the US and China right at the moment. Top 5 dollar falls, we saw SPY, IHVV, IVV, IJH, and VTS. So SPY is the SPY. So that's the State Street Spider S&P 500 ETF Trust. So no real surprises here. You look at all those codes on the top dollar falls. They're all US focused ETFs. So the SPY that tracks obviously S&P 500 index. That's a smaller ETF. There's $31 million market cap in that. You get a little dividend, 1.76% on that one. So down $3.69, which was roughly 0.9% on a volume of very low volume, actually 602 shares traded. I'd say really there's not much spread in that one, so there's not a great deal of demand in that one, that little ETF. Top 5 number of trades. We saw IVV, STW, VAS, MVW, BTS. So IVV, that is the iShares S&P 500 ETF, and that one is quite similar to the one we just explained before, but that is so that seeks to track the yield on the S&P 500. So pretty much picks out all the big stocks, and that one is quite, I'd say about 10 times as large. So you got a bit over $3 billion market cap for that ETF, so it's quite liquid. So that one might be a better option to have a look at if you're looking for exposure to the US. That one has a very similar dividend yield of 1.67% roughly when I checked last. That one has a gold rating from Morningstar, so that one's probably one to have a look at, mainly because I think it's quite liquid, so you can get in and out on that one quite quick if that's how you trade. So top 5 for volume, we saw NDQ, ETHI, IOZ, HAC, and Asia. So NDQ is the BetaShares NASDAQ 100 ETF. And that tracks 100 of the largest US and international non-financial companies listed on the NASDAQ, so all your tech stocks effectively. We saw a good volume of 207,100 shares traded today. Net selling by the look of it, because we saw a price fall. So we're down 33 cents or 1.77%. Top 5 for value today, we saw STW, BIL, IVV, IOZ, and VAS. STW is the State Street Spider S&P ASX 200 fund. That one's designed to provide a low portfolio turnover, accurate index tracking. So S&P ASX 200, track that accurately, and accurate tracking should give you a lower cost. That one's quite a large ETF. So you're looking at roughly $3.7 billion in that one. Nice little dividend yield of 4.36% roughly, and you'll have a Morningstar rating on that one of bronze, so not too bad at all. We saw a total value of $6.6 million traded today, so a few people getting out on that one. As mentioned, she looks like she's down 36 cents or 1.076%. Let's crack on and through our spotlight. So our spotlight is BBLD, which is the Vanguard Global Infrastructure Index ETF. So the Vanguard Global Infrastructure Index ETF seeks to track the return of the FTSE developed core infrastructure index with the net dividends reinvested. So that's hedged to Australian dollar before tracking any account. Before taking into account your fees, expenses, taxes, blah blah blah. We have the ETF provides a low-cost access to infrastructure securities listed in developed countries, mainly the US, which we'll see later. It offers investors diversified exposure to infrastructure assets such as transportation, so toll roads, energy and telecommunications, so pipelines for gas, power lines and things like that. Telecommunications, you got a lot of telephone towers and that type of stuff, companies that manage those things. So the ETF is exposed to the fluctuating values of foreign currencies, as they will not be any hedging of foreign currencies to the Australian dollar. Sorry, so this one's unhedged. What am I talking about? Dreaming. So we have a net asset value of $5.51, trading just above at $5.56. Management costs sort of nudging up there, but this is an international ETF, so they're typically a little bit more expensive, 0.5%. You'll be paid your dividend semi-annually on January and July, and you get a nice little dividend yield there of 3.67%. I think by using this, ETF investors could avoid the cost of directly buying futures or physical commodities to gain exposure to the sector. So looking at a different way to play commodities sector. The ETFs portfolio is comprised of companies that produce food products and companies that produce inputs that go into the supply chain. Yeah, so over the life of the ETF, it's produced 7.87% per annum. We had an inception date of the 2nd of August 2016. So this ETF could be appropriate for investors seeking exposure to a diversified portfolio of global food-related companies, and also it pays a bit of a dividend. So you know, if you're building a strategy as a food play, might be fit into it, or some kind of commodities type of portfolio might fit into it. There's not a lot of these type of ETFs on the market. It's quite small, so also as due diligence, you'd like to also have a look at QCB. But yeah, look, as I say, this is quite a specific ETF, and there's nothing else that kind of mirrors this on the exchange. So the holdings here, we've got Tyson Foods, Archer Daniels Midland, and then you got like Deere, Kubota, which are tractor manufacturers. You know, more food companies as well. Most of those, it's heavily skewed to American market. So you can have a look here. So packaged foods and meats is 33.6% of the index. Agricultural products is 16.4%. Agriculture and farm machinery, 15.6%. Fertilizer and other general agriculture, 14.3%. So it's definitely got a broader mix than sort of soft commodity ETF. So a couple of different ways to play it. But it's not something I'd be overly interested in, just because it's not for me. It's not broad enough. But you know, if you come up with some kind of strategy where this fits in, that might be useful for you. So as always, we're not promoting any particular ETF or product, purely information here. So you need to take your own financial situation into account and get additional information and complete further research as and where required before we make any purchases. As mentioned before, we're here to give you financial just information, I suppose, trying to demystify the whole world, make it not as scary as it appears at times. So we're here to crack your financial sky, make you guys a bit more confident if we can. So give us a thumbs up, subscribe, and make sure to hit the bell because you want to know when the new videos come through. Sometimes I try to get them out at the end of every day, but sometimes it just doesn't happen depending on what else I'm doing at the time. Thanks guys, leave a comment, yes, give us a like, greatly appreciated. Catch you tomorrow. Ciao.